Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart. And today's session opened on the ES with a spike and a channel pattern. You can see it looks very bullish. But if I'm going to look closer, we can see that our spike and channel pattern has overshoot, which means we can expect stronger correction in the opposite direction. Overshoot is a break of the trend channel line. This means overbought area. If you break the trend line, the normal trend line, this is a regular break and you expect new high to be tested. Now, we still expect new high even after overshoot, but because there can be stronger correction, market can sometimes reverse, so definitely want to observe this bearish push. Market keeps breaking below the EMA. I can't go long, can't go short just yet. Market's about to open. And you can see market continues to go lower and the trend down is quite consistent. So because the trend down is so consistent, I like drawing even wider channel because I want to respect the structure. Even though we traded up, this is quite consistent downtrend, so I don't want to go long prematurely, and I'm respecting this downtrend. Market is correcting. I have a new low, first entry short. I have a second entry short, but we're back above the EMA, and it is a doji signal bar. And especially since we traded up into this, we can't really go short just yet. Context is not that great, signal bar is terrible, and it's above EMA. So you gotta be careful. Let's see what's gonna happen, especially if I'm gonna take a look at higher time frame, let's say 10,000 tick chart. We're still above EMA and prices are breaking higher. So because the higher time frame 10,000 tick chart showed that the EMA is holding and we are actually getting some reaction of the EMA, it looks too bullish and I'm not gonna be thinking about selling. Okay, it looks like now that the price is attempting to test the break in new low. Almost new low is made, double bottom, and now the prices are pushing back above the EMA. I'm starting to think back bullish because this uptrend needs to get new high tested. Market keeps working higher, so I'm going to redraw the short-term uptrend like this. And unfortunately, we have overshoot of this channel. Now, the first channel also played out with the break and the new extreme. There's a chance that this channel, the secondary one, is going to get new high as well. But since I have overshoot, once again, I can expect stronger correction in the opposite direction. So I gotta be a little bit careful. Let's see what's gonna happen. Okay, no setup here, new high, first entry long, second entry long. There is no break above bullish bar. I cannot go long above bearish bar. And after overshoot, I would have to skip the very first second entry long regardless. We can have a stronger pullback. Breaking new extreme, downtrend played out. Okay, and we're back above the EMA. So this is a good sign for the bulls. There is no bearish reversal, not even correction, and now we have high-low confirmation set up. It's not really confirming much, and the problem is you can see we're not even full at the EMA. The bar is closing quite high up. You know, not every high-low is created equal. The context matters, and in this case the context is not as bullish as you would like because the first spike and channel played out. Now we have overshoot, but this is the secondary channel. It's not confirming much because you have a first entry long, second entry long, third entry long. So it's not confirming much, it's not for the EMA. I don't really like pulling trigger just yet. It's just not perfect high probability setup, but you can definitely see that the market is still way too bullish, not bearish at all. So you're not even thinking about selling at this point, you're just waiting and following the bullish bias if there's some different pattern established. And because market continued to work higher like this, I have to ask myself, hold on, why market is so bullish and why do we keep working higher this much? Okay, it overall looks quite bullish and there can be some bigger patterns, a little bit more advanced, but I kind of like drawing this spike and channel pattern. You can see it fits pretty well. We spiked up, big spike, secondary, a larger channel. It fits decently. It's not the best fitting channel just yet, but you have series of high highs and high lows. There is no reversal, no correction. So I'm trying to explain why price action is so bullish. And now finally, the overall bullish trend is a little bit more structured. It's a little bit easier to read this. And I can now look for more long opportunities if they're going to be really great. And now we have what we call double trap. Okay, I can reset the count, but let's say I'm not going to reset the count. I have a new high, first entry long, second entry long. The reason why this is double trap, because everyone who went long on a second entry long too early, they get trapped because there's something wrong with the second entry long. The second entry long in this case is so far from the EMA. But at the same time, the sellers who are selling the failed second entry long, they're going to get trapped because they're selling against the main trend. They're selling right into EMA against the main trend. So This is double trap. If I don't reset the count, I can reset the count and basically treat it as a failed breakout only, because as you can see, we have a small consolidation. This is a small trading range. Most breakouts out of these small trading ranges will fail, even for this tiny correction. So this is a failed breakout. If we are fading the failed breakout, we are buying. Fading means trading against the direction of the breakout, and especially since we traded up, we've established the bullish bias. Fading the breakout is actually tempting prospect, so this is a decent high probability setup. You have to use double bar entry because the first signal bar is not good, it's bearish. You wait for trigger this bar. Once this bar gets a trigger, you can enter either to close or drop a limiter a little bit further back down, but it's important to realize that on double bar entry, the stop loss always goes below the initial signal bar, always below this bar. You cannot put it here, but below this bar, you have to put it one tick below this signal bar right here. So structure is too bullish. This is a failed breakout. You can also see the visual: 2 legs down, 1 leg down, second leg down. This is a decent setup, and market keeps going higher, more confirming the bullish bias. Give a new high, first entry long, pull back, second entry long. Of course, I cannot go long above this bearish bar. No, nothing, and the bearish correction is getting stronger. So now I have to redraw a wider downtrend because you can see I get more lower highs, and in fact, the wider downtrend fits well. So this is quite a weaker uptrend, of course. So we can have stronger pullback. We have overshoot. You can widen the channel because after overshoot is not acting as much, but it's not the best structure just yet. You have a mini second entry short. This was tempting. This was a tempting trade. Problem is, if I'm going to zoom back, you can see we've been working higher the entire day. So if anything, I'm more expecting break a new low and then prices resuming the bullish bias. Okay, it's tempting local because you're at 2 key entry points. It is a second entry short. I know a few traders took it. It's not my cup of tea because I always like to follow the main bias. I want to make my trading as easy as possible. But you know, more advanced trader can consider a second entry short, 2 key entry points. You're betting on the short-term downtrend. The trend is not super strong, by the way, okay? So that's the reason why you can take it. The trend is quite weak. Even the wider channel is not fully confirmed. So this is why you can consider. Market keeps going lower now. I would definitely not think about selling. I cannot go long just yet. We're below EMA. I can only go long if we get a push above EMA and some failed second entry short. Okay, that's the only opportunity for me to go long because we don't know how long this pullback is going to be. One leg up, break, second leg up. And market created massive push to new extreme, so the downtrend played out. So we have one leg, break, second leg. If we're not going to get a break above the exponential moving average, back above the EMA, now you would expect for prices to test the new high for this big main channel. Okay, so downtrend played out. You have the push above EMA and you have a new low, first entry short, push above EMA, and a second entry short failure. You have failed second entry short, big bullish bar, you're above EMA, downtrend played out with the break, push to new extreme. You have strong bullish signal bar, so this is a decent high probability setup. Downtrend played out. You're now looking to engage with the main bullish bias. Failed second entry short, great signal bar. Market keeps going higher, so I'm going to redraw the uptrend now because I expect the main trend to get the new high. I'm looking for second entry long at the EMA, okay? Because the main channel needs new high, the secondary channel is in play. There's always a channel present on a chart for every price movement. So you can see if you follow these trend line rules, you identify the big picture and then you focus on the small patterns as well. You can just follow price action and you can be able to predict price action for the most part. But you have to be patient and you have to make sure you're reading this correctly. You're not gambling. And it's okay to wait a little bit for prices to give you a clear picture. And now it's clear. We're going higher. Downtrend played out. There is no bearish bias and channels are in play. Can I get a second entry long at the EMA? No, you have a second entry long here, of course, so far from the EMA, and the downtrend is still in play, so I can't take that. Not even at the EMA. Downtrend still in play. Okay, we're closing outside, so I'm considering potential high low. Why am I thinking about high low? Well, because two trends now need to get new high. This one, the big one, and also while we're going sideways, we have small support established. So I would have EMA and small support. The more key entry points I have, the better. So high low would be okay, but we didn't get high low. Market continues to go higher. and all trends now played out. As you can see, the big spike in a channel played out. In fact, every single channel I have on my chart played out. The big one, not the best confirmed. The secondary one here, in case you're not playing the big channel, you're playing short-term channels because the big one doesn't fit that well. Even this one played out with the break new high, okay? So I'm pausing looking to go long because all channels played out. It's tempting to draw spike in a channel, but it's too early. It's too early for that. You would need more higher highs and higher lows, stronger push phase working higher, because at this point all channels played out. Follow the trend line rule, especially on a day like this. Don't be too eager to look for multiple patterns. You have a break in new high, you have a second leg, that's common, that can happen. Market continues to go lower. Okay, interesting. So we're going to redraw the wider downtrend. Your first entry short, second entry short below bullish doji inside bar. I can't take it. We're going sideways now. You have potential for second entry long, but it didn't trigger. But at this point, you still can't really take it because it's too congested. You can see 10 bars stacked right next to each other. EMA exactly in all these bars. A lot of dojis. I can't take anything. You have a new high, first entry long, pullback, second entry long failure. This is tempting. Felt second entry long. I would prefer had this formed as a legitimate breakout pullback. You can see it's still quite part of congestion. Can make it a little bit tighter, but you know, I want to see a legitimate breakout side, pullback to know prices free themselves out of this congestion, and then it's a better setup. It's much easier to trust it. But this feels still a little bit part of the initial consolidation, which is not something you want to see. We want to see a breakout pullback. For this reason, it's a bit more aggressive, but it makes sense. All trends played out. Reversal break below EMA, and you're back below the exponential moving average. Break in extreme, downtrend played out, and now the market is about to close. So this is the overall structure for today. Quite a slow day. I was surprised why it was moving this slowly. There are a few good setups, not that many, but I don't see no traps, which is good. It's always better when there are not that many setups, but in return there are no traps, because I don't see any good setup that would confuse you and you would have a losing trade. So this is always good. So two decent setups, two great high probability setups if you're patient, but for the most part only a handful of aggressive ones. But I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.